Hi, I'm Seth Freudberg. I'm the Director of Options Training here at SMBU in Manhattan, and I'm also the head trader of SMB's Options Trading Desk. So this week I'd like to talk about a concept that you usually hear in the context of day traders, but it has an application for options income trading as well, and that's the concept of an A-plus setup. So in day trading, every trader is a little bit different, and there are certain trading situations that they seem to trade better than others. And on the equity side here at SMB, the intraday equity traders, also known as day traders, they have this concept called your A-plus setup. And everyone here at SMB creates their own playbook of trades and in detail explains how they will handle each trading situation. And there's certain trades that they seem to trade better. And they've done back testing, or through experience, they know that they're going to trade particular situations very well. And they are encouraged on the equity side here to double or triple, their risk size for what they call their A-plus setups, their best trades, the trades that they are most confident in, the trades they're most successful with. So I was thinking about whether this concept is applicable to options income trading, which, as you know, is a very different nature than day trading, in that we make money when the market doesn't move. So how could you have an A-plus setup in a trading strategy where the market does not move? And the answer is there are a number of cases where that's so. And let me give you a couple examples. Let's talk about the bearish butterfly. And the bearish butterfly is a strategy that we share with the world here at SMB. It's a strategy that many of the traders on our trading desk trade. And it basically involves placing a butterfly spread behind the market. And then if the market rallies, you keep adding butterflies behind the market. And if the market sells off, then the butterfly you sold is going to get more valuable. If you have multiple butterflies on, they will get more valuable. And it's a very, very high quality trade. It's a terrific trade with a great return associated with it typically. And so what we have found is that through some analysis of the market, that if the Russell 2000 index increases over a 60-day period by a certain amount, there is a tendency for the bearish butterfly to have a much higher probability of success than if it does not increase by that amount over a 60-day period. And the basic principle is pretty simple. If you're trading a trade that does best under bearish conditions, then if a rally goes on for a very long time, typically there's a pullback. The rally gets long in the tooth, so to speak, and you're going to make more money. You're going to make money more consistently if the market has rallied for an extended period of time over a 60-day period. So you can see this chart here of the Russell 2000 back in November of 2014. You can see that the market hit a point where it had rallied substantially, and right around the top there would have been a point that would have triggered some interest among bearish butterfly traders because of some studies that have been done, and sure enough, the market did stall there and actually sell off a bit, which would be great conditions for a bearish butterfly. The same thing actually happened earlier this week, where the market had rallied to the point where it might not be the worst time in the world to put on a bearish butterfly. So that was, and in fact, a number of the traders on our desk did initiate bearish trades this week. So you could argue that that's an A-plus. That would be the equivalent of an A-plus setup for an options income trader. And so you could argue that under those circumstances, let's say you trade the bearish butterfly every month, no matter what, in an A-plus type of setup where the market's rallied for quickly over a 60-day period, then you may want to add some size to that trade. You may want to double or triple your typical sized bearish butterfly because it's an A+ setup for you. So that would be one example. A second example is a very different kind of trade. One of the guys on our trading desk here who trades both equities and he trades on our options trading desk, Joe Murray. Joe has developed an iron condor trade, what you might call a set it and forget it trade. He puts it on 45 days out from expiration and he just doesn't touch it. It either wins or it loses. And through some statistical studies he's done, it's really worked out, very, very well for him. And what Joe found in his study was that when the market volatility increases to near 100%, the 100th percentile for the volatility range of that particular stock or index over the last 12 months, that is a very high probability setup for one of these iron condor trades. And the reasoning's kind of easy to understand. When the market volatility gets very high, which typically happens in a sell-off, then that usually is the peak of the volatility, somewhere around that point, and eventually the market kind of settles down and the fear comes out, the volatility comes out of the options, and it's usually a high probability trade. So that would be another example where volatility has gotten to the 100th percentile of the last 12 months for whatever you're trading. Then that could be, with certain trading strategies, a signal that you're in an A+ setup and you may want to increase your size. So just think about it. If when you have the highest probability of making money, you have the most capital in the trade, that should improve your returns over time as an options trader. And that sounds like, to me, a pretty good idea to think about seriously. So think about, what are your A+ setups? What are the situations where you're trading the best as an options income trader? What are the circumstances where when you look back you realize, wow, every time that particular combination of events occurred, I made money. It wasn't a fluke. There was a logic behind it. There was a reasoning behind why I made money. Those might be the times you want to size up a little bit, increase your capital level, and improve your returns over time on your account. So give that some thought, and we'll see you next week. Thank you.